But the more interesting conversation is how do I create new markets, new sources of value, new revenue?
Yes.
You know what I mean? All of that kind of stuff. And I think from our point of view, like the things that we're interested in, the insurgent mindset here is um, how do I use that as a tool for disrupting my industry and creating my own unfair advantage?
Welcome back to the Insurgent Mindset. I'm Rondo Moses.
And I'm Matt Tice, and this is a podcast about challenger thinking in a world shaped by disruption.
In each episode, we explore the strategies and leadership mindsets that help businesses break from the pack and stay ahead in fast-changing markets.
You'll hear conversations, case studies, and insights from leaders who are applying these mindsets to thrive in this uncertain environment.
Subscribe to our YouTube channel or follow us on Apple Podcasts or Spotify, and check out our companion blogs at insurgentgroup.com for a summary of takeaways from each episode. Now let's get into today's conversation, Matt.
Sure, Rondo, great to see you. I'm looking forward to discussing this. It's been on my mind. Basically, the topic today is token economics, or otherwise known as tokenomics. And if anyone's been following the news over the last few weeks, sort of as these sort of quarterly results keep sort of piling up the token expenditure, and some of these large enterprises we're seeing 500 to $1 billion of unexpected token expenditure. So I thought
Mhm.
it'd be interesting just to throw this out there and maybe explore just a little bit deeper what drives token economics, and why CEOs, CFOs, and boards need to think really carefully about how how to balance the value of the AI expenditure with with what really amounts to runaway spending.
Yeah. I mean, man, I think for context, I think our audience should know that the price of using AI, as you said, has really collapsed. And it's by a factor of several hundred over the past 3 years. And, with the cost moving from $60 per token to just pennies today, you would expect that AI expenses would go down, but it happened. In fact, companies are spending an enormous amount on it. So I guess the question on the table and the tension in the conversation is going to be, what's wrong with the math? What's happening here?
Right. So I don't think there's too much wrong with the math. I think it's not unexpected. But anyway, I think, let's unpack it. So Rondo, let's start with, just what is a token, right? I think it's interesting to get our heads around, a token. Is it a unit of computing, or compute as we call it now, or is it a unit of something else? So let's start by kind of like setting the table here with, what is a token?
Token is a fraction in AI, it's a fraction of a word, right? So each fraction of a word counts for a token. So you can have dark. Dark could be one token, but you can have darkness. Dark is a token and ness is a token, and that's two tokens, for example, for that word, darkness. And you use tokens going in. So your queries that you would put into an AI chat, for example, creates tokens going in. And as the AI is responding to your request, your answer, those are tokens going out. Those are also tokens that count as well. So those all create tokens, but it's a part of a word. It's a fraction of a word.
Okay, so or yeah, I guess a fraction of a word, or a fraction of an image, or a video, or
Or
whatever.
video. Yes.
But
Yeah.
essentially, the basic core unit of a particular query, whatever that might be, right? So and I think it's useful that sort of, on one hand, you have the input token, which is largely, I think the way you described it is correct. It's a kind of compute value, which is a fraction of a word, or, and that's a token, and lots of tokens are assembled together to create some sort of output, which
Hmm.
is largely almost a unit of intelligence, right? And they're almost quite different in terms of how they behave economically. So I think it's interesting to parse those. So to your earlier point about the cost per unit or per token dropping quite significantly, like 98% or something like that from, the let's say early part of 2022 to today. Well, I think you said 60 cents down to 4 cents or something like that, right? So
$60 per million down to
$60, yeah, down
pennies.
to sort of 4 cents per
Yep.
what is it, per million tokens is basically how it works. So
Yep.
it's $60 per million tokens, which is essentially the unit, right? And then down to, let's say, 4 cents per million tokens. So that number is obviously almost like hugely deflationary, right? So almost like a what would we call it? Like it's like a logarithmic effect downwards, right?
Downward.
Yeah.
Right.
You
Yep.
know what I mean?
Yep.
So we talk about
Yep.
exponential increases. This is an exponential decrease. So then if that's happening, right, we should see theoretically, I guess to your earlier point, we should see the cost of computing or the cost of I suppose the output dramatically dropping, but that's not what's happening, is it, Rondo?
Right. No, that's not what's happening at all because as the cost of AI has dropped, there's been an increase in the usage. People are finding more applications or using it in for more use cases for AI. So it's sort of, there's a principle or paradox for this. It's called the Javon paradox, that
Hmm.
as the price of a resource drops, the consumption increases, and that causes an increase in the use. The same thing happened with electricity. As electricity costs drop, people find more applications for it, that particular utility.
Right. I think Javon had written originally a paper on coal usage in Britain in the mid
Yes.
1800s, something like that, right? So,
Yep. Yep.
um, so I guess, all right. So basically, what we have is a dramatic decrease in cost, but I suppose as that cost comes down, it unlocks and opens up more and more use cases for the application of AI, which in turn generates more opportunity to create value, which in turn creates more usage, which then in turn creates an explosion um, of the use of tokens and therefore drives up the cost, at least in terms of the cost of consumption of those tokens inside the enterprise.
Yeah. I'll give an example. Apparently, Uber gave 5,000 engineers an AI coding tool in December and burned through its whole 2026 budget in just 4 months.
Hmm. Yes.
That's what's happening.
I think Microsoft had a similar situation with, they pulled back on Claude Code with their engineers, said no more, right? So, Amazon similarly, I think they had a leaderboard set
Yep.
up for token
Leaderboard.
usage and
Yep.
decided that, well, maybe that's not a good idea because what it does is creates, there's a term I think that's sort of been coined token maxing, which is
Token maximization. Yep.
right? So where people are using tokens for virtually everything, and most of that use is not necessarily adding any value. So I think that's really ultimately the big question is what are you using these things for? And
Mm-hmm.
what's the ROI? And
Mm-hmm.
it's sort of if you're asking a stupid question, like what color is Rondo's shirt, you're still going to consume tokens. And the problem is, we didn't talk about this yet, but the problem isn't just that you or I ask the AI a question and that consumes tokens. There's also this sort of recursive effect where we ask the question and then the AI spins its wheels, speaking to the model, speaking to other AIs, maybe speaking to other agents, and so on in the background,
Right.
sort of multiplying and compounding the use of the agents, which then in very unpredictable ways can create a lot of additional expenditure. So that's problematic. But I think the challenge is the user doesn't understand the mechanics of that. So to them, it's just, as you pointed out before, it's a token, an input prompt, sort of, what the user wants is the unit of intelligence. What the
Right.
computer wants to do is deliver, a unit of compute. And what's increasingly happening is now that AI is getting more intelligent, um, the AI is trying to is trying to think through in a very clever way the outcome that Rondo wants when he's making a prompt or querying. and that can run off the rails. So, the usage kind of gets really compounded over time. So I think that's the thing. So then all of a sudden you have, if you have a model that's heavily dependent on consumption, in other words, let's say you have a Claude account or whatever, and you're sort of, the business model or the contract that you've signed up with Claude Code might be based on consumption. In other words, how much token usage, that can be quite unpredictable, particularly if individuals don't understand um, how their query propagates through the AI and what
Yeah.
that comes out in terms of token consumption.
Well, I also think that this speaks to, governance. We're saying who's governing the spending, right? But there's certain ways that organizations could be looking at this. For example, not all tokens cost the same by companies. So there are certain flagship companies where the cost per token is higher than the lower end companies where it's very cheap per
Hmm.
token. And so it's identifying which types of use cases or queries should be sent to which type of platform, I think is a part of figuring this thing out. Like your really simple question should go to the lowest cost platform, and
Model.
your more complicated questions should go to the more, sophisticated, the flagship models, which cost more.
Right.
That's one way. That's one way to think about it. Another way that I've heard that some folks are thinking about it is finding out, evaluating engineers on their ability to use tokens efficiently.
Hmm.
So it's not only having technical capability, but do you have broad business acumen? And then are you able so having the ability to design a solution most efficiently with tokens would be a skill set that companies will start to look for in engineers,
Oh,
for
not just
example.
engineers, though. Everyone's using it, right? So
Right,
everything from
right,
your business analyst to your finance team to everybody, right? So,
right.
and it's virtually impossible to prevent people from using AI, although that's certainly been on many agendas. So I agree with that. I think that is a challenge. It's sort of like first, how do you make sure that the value of the work matches the model, right?
Right,
Which speaks
right.
to something really interesting, which is kind of that, not all tokens are equal in a sense. So certain, while at its most basic level, maybe the cost per unit, the input token, if we're going to use that language, maybe that's more universal. The output token or the intelligence value of a token is very different. So therefore,
Yes.
right? So therefore, you almost get a split of the economics, and I think that's fascinating. So then, if you sort of extrapolate that a little bit, it sort of starts to take on some kind of interesting commodity characteristics, right? So on one side of it, you have dollars per million tokens, whatever that is. So that's 4 cents per million. That number probably will continue to go down, right? For
Hmm.
a little while anyway. I'm not sure what the floor will be, but probably it'll be some combination of at some point you reach a number that sort of hits the marginal cost of a unit of energy to produce a 1 millionth of a token, whatever that is, and that then
Yeah.
obviously can't charge more than that. So that reaches kind of a point where that curve will ultimately flatten out. Hard to say when that'll happen, but on average, I suppose energy costs continue to go up. So that'll be problematic. So in a sense, and this is already happening, the commodity value of an input token takes on those commodity characteristics, which then means it becomes exchangeable, right? So you can almost imagine different commodity asset classes. One is coal, one is oil, one is wheat, or maybe one is Brent crude, sweet crude, Texas crude, whatever it is. You know what I mean? And
Hmm.
AI then becomes almost a tradable commodity, which then can be set into, your CFO or your board can sit down and say, how do we hedge this commodity? How do we trade this commodity? And so on. So that becomes really interesting, I think, as a way this could evolve as much in the way, but not quite the same as kind of like cloud computing or other energy inputs, right?
Yeah.
That's
Yeah.
that's the input side. But I think on the intelligence side, it's a little bit different because it almost is more like a currency. And not so much as a commodity, but a currency. And depending on what you're buying, you sort of have different types of currency that have higher or lower value. And I don't know if anyone's quite figured that out, but if you were able to create an exchange for um, token intelligence, that would be interesting to see where that got to. I'm not sure how that'll work, but essentially you kind of start thinking about here's a what I'm doing is I'm buying a unit of intelligence. That unit of intelligence is going to do some meaningful work. That work has meaningful value, and it's benchmarked, perhaps in the short term at least, against uh, what it would take to deploy that work using capital or people, right? And then
Hmm.
understanding the trade-off between a unit of AI token intelligence and expenditure versus people expenditure is obviously something everyone's grappling with, particularly as we see, um, I don't know, Commonwealth Bank here in Australia is cutting thousands of workers. It's all over the place, right? So, there is starting to be there's starting to be an understanding of what units of work are worth and how those tokens or agents translate into that value. And I think the challenge for
Mm.
the CFO, for example, is to be able to navigate through that and almost understand what does my AI P&L look like, and to what degree is the firm adding more value on, per unit of token expenditure than versus the opportunity cost of other units of value, for example.
Yeah, I mean, I think I don't know if this is similar to what you're saying, but the way I'm thinking about it is that organizations need to take a more strategic approach to how they govern the use of AI tokens. So not just saying go forth and use tokens, right? It's here are the areas where we want to invest in using tokens. We want applications in these buckets, for example. Everything else is lower priority and they will maybe considered after we've sort of decided how much we've spent with these priority areas. And even within those priority areas, there are probably specific um, outputs or outcomes that the organization is looking for, and they want people working on those things. I think, as I said before, I think the other big opportunity is to have some protocol around when certain models can be used and when others should be used. So maybe the majority of employees in the organization wouldn't have access to the flagship models, but maybe they will have access to a very low cost platform where they can ask more simplistic questions and it won't really cost a lot for the organization. So I think
Mm.
they have to have that kind of bifurcation in terms of how they're thinking about who gets access to AI and which models they have access to as well in order to manage their cost.
Yeah, I think that's certainly part of it, obviously, and that there's a business model component to that too, right? So you can have, for example, for some of the lower value or more predictable tasks, you can have a fixed cost SaaS model, for example, where you're buying those token. Essentially, you're pushing the risk onto the supplier, right? So let's say I have Salesforce or whatever. I don't have a per token model that I'm purchasing these tokens through. And essentially, what I'm paying for is that capability, and I'm paying for that in sort of a more traditional, almost subscription model, right? So I don't know, $100 a week or $100 a month. I pay for X. I get the capability, and the risk goes on to the vendor, basically, right? So
Right.
they have to do that efficiently, and maybe that lends itself well, perhaps to accounting tasks or highly repeatable activity. But where you get into trouble is where you have the vampires who are, consuming tons of tokens, right? Like
Yeah.
say in a call center or something, the vampire might be that really squeaky wheel customer that, just keeps calling over and over and over again, right? So sometimes those push the economics out a little bit, and that challenges the vendors because then the vendors need to push the cost eventually onto the customers. So I'm not sure we've seen that yet, but I think that's coming. I think then to your point, also it's almost like you can imagine a chart where the higher the intelligence required, right, the higher the value, and then therefore the cost, the economics or the value of that currency is higher, right?
Hmm.
So then for where you have that complexity or a high degree of intelligence, you have to be very, very careful about your use of kind of consumption models, right? Where, you know, obviously the hardest problems require the most compute and the most intelligence, not dissimilar to the people, right? So, the bigger, the more difficult the problem, the more intelligent a person you need. Sweeping
Yeah.
the floor, you need someone capable, but not necessarily really that intelligent. And, your cost per unit of labor is going to be different. It's pretty similar, I think, in the token intelligence world. But those consumption models where you're paying for that unit of intelligence is, has to be very narrow, I think. And I think then the
Yeah.
third model that evolves is then what a company's going to be trying to do is saying like, okay, well, um, I don't want to take all this risk. So then how do I make this a fixed cost? So, for example, what you might do is you might create your own AI factory inside the enterprise where, you might have, it's like almost like building your own nuclear reactor to get your energy,
You
right?
get your energy from the
You
data center.
created the
Right.
AI factory, which essentially is a huge upfront capital cost, but then your cost per unit will be very low or approaching zero once you made that investment. So I think, you'll kind of see that split into these three different models. Um,
Hmm.
and I think that'll be interesting. And then I think also what we might see, and I just want to circle back to this because I'm really interested in this, is that these tokens might emerge as a tradable commodity on one hand, or a currency on the other hand. So almost like you know, we Bitcoin, for example, is largely a speculative currency, but you can imagine the link between crypto and AI tokens creating creating something new, which is essentially a tradable currency commodity almost. Uh,
Hmm.
I think that's a very plausible future. So then if you extrapolate that one more point, you can imagine a future where um, we're using these tokens as as currency and or as a store of value, for example.
But would the assumption then in that model be that there's a surplus of unused tokens out there to make that exchange? Like someone has excess tokens that they're not using, and so they want to, and someone else needs them, or how would that work?
Well, just like monetary supply, right? So if there's money sloshing around in the system, if there's more money sloshing around in the system, does the currency value go up or down?
Hmm.
Right? It goes down,
Yeah.
right?
Yeah.
And
Yeah.
as it gets more constrained, the value goes up. And then you can imagine people are speculating on these values, right? So as capacity gets constrained, then the value should increase, and therefore, the store of value might increase as well. So anyway, I don't think we're not there yet, but I think it's interesting
Yeah.
just to keep thinking about like if you keep extrapolating this. I think you're absolutely right. For the firm, the challenge is how do I contain costs and get the highest value output possible, right? And do
Yeah.
that in a way that's governed properly and that incentivizes people to use this technology to create more valuable work, but understand how those economics work in terms of the trade-offs of, not doing the work, using a person to do the work, or, employing tokens to use the work. And then once you make that decision, what's the model? Are we gonna are we gonna buy that in a SaaS environment? Are we gonna pay per token, or are we gonna make fixed cost investments to hedge our costs? Or are we gonna say, for example, take future um, I don't know the term for it, but you can imagine that it would be like a future token contract to
Hmm. Like futures on
associate with
tokens.
oil, right? You know
Futures
what I
on
mean?
tokens. Yeah.
Futures, token futures,
Mhm.
right? So,
Token futures. Yeah.
Yep. So you can imagine the CFO in Treasury sitting down and saying, okay, well, I've got energy to think about, right? So if I'm like diesel or something like that, or
Yeah.
electricity, I might need to deal with that. And now I've got this other thing I've got to think about, which is how do I hedge my token investment? And my typical one is, Treasury deals with hedging your currency risk. So I
But
think
it's
it
but it's
becomes
interesting.
a whole new asset class.
But it's interesting. I see tokens more like a utility, moving more like a utility, like the electricity, that you've got to be able to meter usage of that utility. And you've got to be able to meter usage of AI tokens. And that's why I think the governance around which model gets used when, and whether it's to your earlier point about whether it's a human or a token, those kinds of decisions have to be made. And because I think to me it's more like a utility than a commodity, like coal, or I mean, I think it's different in that way because you got to meter it. Because right now the
Well, you meter
power,
electricity. That's tradable as a commodity, right?
yeah, but it is. But I think that first piece is when I think about you got to regulate how much for example, how much electricity your company is using. You can manage that, right? You can make some decision to say, okay, you've got to cut lights off at a certain hour, or
Hmm.
you've got to make some real hard decisions about electricity usage. You don't just leave lights on 24/7, for
Yeah.
example,
Yeah.
right? I think you have to have similar kinds of policies around tokens and when they're used, how they're used, what type, to your earlier point, what types of outcomes you're trying to drive with that token as well.
Yeah, but I think that there's like an interesting conversation we had about that. So if we could kind of go back to some of our earlier discussions in this podcast around productivity, right? So we you
Right.
have you have the productivity numerator output, productivity denominator, obviously labor or hour of labor, right? So I agree with you partly in a sense that, the utility part of it is really denominator, right? So how do I drive
Hmm.
down that cost per unit of that utility? So for example, if we thought that like 5 years ago or 3 years ago, if we knew that that commodity future was going to be and that curve was going to drop 98% from $60 per million to 4 cents per million, right? We probably would have bought a futures contract on that. You know what I mean?
Right.
No one knew
Right.
what that curve was going to look like because it hadn't been established yet. Everyone kind of knew that it would go down. And then we've had some big jumps along the way with DeepSeek and other things like that, where models have been more efficient and some small impact on Moore's law, but most of it's probably model efficiency that's driven down that cost, right?
Right.
So that's definitely happened. So that I see that as the denominator. You know what I mean? It's sort of, and I agree completely with everything you said. It's sort of like let's make sure that we're really efficient. But I think the real opportunity is the numerator, which is more how do we apply that intelligence to achieve more value? You know
Oh,
what I
I
mean?
agree with that.
So
100%.
and then it's the ROI conversation of how do we understand and then sort of vector our investment to make sure
Yes.
that investment is driving numerator outcomes. And we both know that you get a lot more leverage from the numerator than the
Right.
denominator, right? So
Right.
to me,
Right.
that's where the game has to be. And I think the economics of output, in other words, what do I get for a unit of intelligence in a given context, to your earlier point, is the thing we
Hmm.
really need to understand. Right?
Hmm.
But the
Hmm.
cost side of it, partly the cost side of it is driven by, we mentioned already that the higher degree of complexity or intelligence required makes the AI work harder, which then consumes more units, which then obviously creates more cost, right?
Yeah.
That's going to be a given. But trying to understand that value curve, I think, is the key challenge for the board, for the CFO, for the CEO. And then to your point, how do we make sure that the people are using AI as a utility, are using that effect cost effectively? And then how do
Right.
we gear the organization to focus on the numerator, right? Let's make investments, particularly where we're applying that intelligence to create new value outcomes. I think that's where the sweet spot has to be.
I totally agree with you. Totally agree with everything you're saying because I think most organizations have been focused on the efficiency part. How can they use AI to improve efficiency? And some of them, it's working, but it's table stakes. The real opportunity, as you said, is going to be on value creation. How do you use it to improve value delivered to customers, valuable value ultimately to the organization? That's the hard part. And I think that's where organizations are struggling right now with AI because they're not seeing to the level I think that they expected the efficiency savings from AI yet.
Hmm.
But they haven't really even looked at, I don't think, the value creation part of it.
I,
And so they're spending a lot of tokens on efficiency and not looking for value creation.
right. And of course, efficiency will reach diminishing returns too, right? So right now there's a lot of leakage to your point because a lot of those tokens and therefore dollars are going to spread like peanut butter throughout the enterprise. And some of
Hmm.
those things are creating efficiency benefits. Others are just creating more cost. You know what I mean?
Right,
So at the end of the day,
right,
you're not necessarily harvesting that. And then the easy thing to do is to say, okay, well, this cost is going up. So you're almost making this bet that I feel like I'm going to get more efficiency out of this investment than I am out of the people doing it today. So I'll just cut the heads. You know what I mean?
right, right,
Okay, so that's where we're at now, or where kind of where we were. We're sort of graduating out of that now, right? So then you kind of go along a little bit, and then you have okay, now we're going to apply agents to do work that humans are going to replace work that's already there. You know what I mean? So essentially, this is like the workflow era, where a workflow, can a person do it or can an agent do it more effectively? Let's replace the person if the agent can do it more effectively. You do the economics on that. Okay, fine.
right.
Okay. I think, all right, that's useful. But the more interesting conversation is how do I create new markets, new sources of value, new revenue?
Yes,
You know what I mean? All of that kind of stuff. And I think from our point of view, like the things that we're interested in, the insurgent mindset here is um, how do I use that as a tool for disrupting my industry and creating my own unfair advantage, right? That, where I
yes,
create this new source of value before everyone else does, while everyone else is focused on efficiency and replacing existing workflows, I want to be able to funnel my investments to apply intelligence to create new value outcomes. That's
right,
that's the disruption
right,
opportunity.
right. It's sort of like why, you're using AI just to do what you do today, just do it better or do it faster.
Hmm.
Right? Not to do it differently, not to reimagine, to your point, this workflow or reimagine your connection to customers or how you deliver value to customers. You're not stepping back and doing that part. You're just doing what you do. It's sort of like the transition that companies went through with digital transformation.
Hmm.
Mostly what they were trying to do was just take what they're doing offline and put it online. It's a similar way of thinking, I think, if people are approaching AI. How can I use AI to do what I'm doing, but just do it? And in some cases, it's not really just a cost savings. It's just that AI can do it faster
Right.
for them,
Yeah.
you know?
Yeah, yeah. So I think right now what we see is a big expansion of almost an expansion of the economy because more people are doing this kind of stuff. But we haven't seen too many of the big cases where, the blockbusters of the world have completely disappeared yet because
Yes, yeah,
people have created these new sources of value. I mean, it's obviously coming, and certainly there are thousands of new firms that are creating value. Um, and that value is largely to provide these utilities to do the work that's already being,
yeah.
you know what I
I
mean?
think part of the
Automation
part
of
of the exercise.
workflows being the main one. Yeah.
I'm sorry about that. I was going to say part of the what I think part of the exercises for companies is to think as if they were AI native. If they were an AI native company, how would they treat this specific connection to customers? What value would they create? I think trying to create that kind of a mindset would help them move into and venture into new value creation sources, I think. But
Hmm.
but just thinking with the same existing mindset of the established, way of working, I don't think will lead them there. They need to
Okay,
act
well,
as
let's
if,
take an example there. Let's say you're um, a Salesforce or a HubSpot or someone like that, right? Now, these guys have an established SaaS model, right? That model has been developed and it's going pretty well. HubSpot's been taking market share. Salesforce is a behemoth. They're both putting lots of intelligence into their applications, right? So
mm-hmm,
providing that the value in the experience almost for the customer so that they can use AI, for example, for customer analytics or targeting or segmentation or these kinds of things inside these applications, right? So valuable, certainly, right? But
yep,
it's
yep,
still Salesforce and it's still HubSpot and it's still a, kind of a SaaS model. They're not really charging you per token, although that may be the case in certain at the edges, not sure, but all right. So now these guys in our language would be, even though they weren't 10 years ago, they're going to be software incumbents, right?
right,
So here
right.
they are, they're competing as traditional SaaS players, but they're putting a lot of intelligence in there to kind of keep things advanced, right? So now two scenarios, right? So one is to apply your thinking, I'm an AI native inside Salesforce. Okay. So
Mm-hmm.
um, the risk is you can almost imagine that what the AI native would do is say, do I need all this software at all? You know what I mean?
Isn't that? Yeah,
So you have kind of A and B. So Salesforce has to protect this model, which is very
right.
typical of most incumbents,
Yes,
right?
there you
You got
go.
to keep squeezing value out of that model. They want to make it efficient and they want to stay just ahead of the customer, and which is what they're doing by investing in this AI, so that the customer's expectations of um, the productivity benefit from the software continues to expand, right? So those are all the
Hmm.
things they're going to try to do. But the AI native might say, well, hang on a minute. Um, I could create a situation where if Rondo just has all of his customer data in a pool, um, every time Rondo prompts a question, the software auto generates and creates a value outcome, right? So, for example, instead of having, the SaaS and all that, you don't have any of that. Basically, you just have a question, which is how do I target an individual? And the software might self-assemble to deliver that, or you know what I mean? You're prompting.
Hmm.
And, I think it's, what the AI native company would do was say, well, actually, I don't need any of the software. I can kind of cut out that whole middle layer and create something that's completely emergent every time the question comes up so that it's 100% focused on the value, right?
Yeah,
As
yeah.
compared to the software. You know what I mean?
It's interesting because when you were talking, I was thinking this is crazy, but I was thinking, what if, like you said, they put in a prompt and this AI native company inside Salesforce is comprised of a bunch of different agents with different capabilities. And based on the prompt, these agents are in the background pulling together the process to solve that particular problem. So there's not like to your point, there's not a software, but they have this agents that are behind the prompt that's taking whatever that query is and coming back with a solution that fits that specific. So it's more personalized to that specific
Sure.
request. You
Right.
know what I mean?
Yeah. So what software typically does is, right, so they'll take a problem, they'll design the software around that problem,
Around
right?
that problem.
And then the economics of software are basically once you've done the fixed costs, the marginal cost to deliver that unit of value is quite low. So that's why like the economics of software are, 90% plus gross margins, right? So
Hmm.
just
Hmm.
huge value. Now, in this other model, where as we've just described that, it's a little bit different because the agent can learn from itself, right? You're putting in the prompt or the query. Now, the agent will know, like at a given point, this is the state of best practice, but because it has access to all this data and access to other agents that are learning about this, it's sort of completely recursive. It learns from itself. Um, the next time you ask the question, it's better. And at the time
Right.
after that, it's better. Whereas with software, that's a slow process because you have to make, you're continuously doing these software upgrades. Now it's getting faster
Upgrades.
because of AI, but you can imagine a situation where that doesn't exist at all. So then let's extrapolate through that out through the whole economy. Now all of a sudden you have the softwareless software company where all you're doing is you're helping the customer, the client, the consumer to deliver a unit of value, right? And behind the curtain is this sort of this approach which allows the almost the self-assembly of the software to deliver that particular query. You know what I mean?
Hmm.
So
Hmm. Hmm.
I want to know, I don't know, I want to know the profitability of a very narrow segment of my customer population, right? I asked that question. Now I've got all the data. I know who all my customers are, all that stuff. That's stored in a database somewhere, right? Or some series of a data lake, whatever that might be. But then that self-assembly then creates that unit of value out, right?
Yeah.
How do we do that today? We have this huge tech stack that delivers that. You're sort of sitting at the board. You've got a reporting layer, you've got a BI layer, you got your Salesforce and ERP and all these other things and so on all the way down. So you could create this big complex tech stack to deliver that. Maybe an AI native approach is to slice all the way through most of that, right? And you have one basic unit at the bottom, which is like the AI factory, right? Then the next unit is like your big data lake. And then above that is these utilities that can essentially prompt the outcomes.
And prompt the outcome.
So
Really.
let's say now you're a
Simple.
manufacturing business, right? And we've talked about this on the podcast too. Let's say you're a manufacturing business. And I think this is interesting in terms of the economics of all businesses, like who's got the value, say in accounting or engineering or manufacturing over the last 2 decades. It's not necessarily like the economic value, right? It's not necessarily the accountant. It's the firm that's providing platform solutions to the accountant. You know what I mean?
Hmm.
So
Hmm.
that's where all the new economic value has been created. That's why these companies trade at 25 times EBITDA, and the accounting firm trades at, whatever, I don't know, 3 times EBITDA or maybe 1 times revenue, something like that. It's a huge difference in value creation. So then
Yeah.
you like take manufacturing, take any of it, you can kind of almost imagine why would you make stuff when you could solve, for example, an optimization problem for a factory. There's probably more value created in doing that. Um, but then I guess to your original point, do you see a commoditization of that intelligence? Probably, but I think these forces are going to be very interesting to see how that plays out. So first, in who's creating these new sources of economic value, right? And obviously,
Yeah.
private equity and the markets will govern that at some level. And then what does AI native really mean and what does it look like? So
Yeah.
I think that's very interesting.
Well, I know that there's a big push in some cases toward AI verticals, right? For example,
Okay,
in
develop that
healthcare,
then.
right?
Okay. Yep.
Healthcare, in finance. So, I mean, that push versus the general horizontal AIs, what that a lot of people are very familiar with, they're going to start to be industry specific. They're going to start to be more focused on specific problems to your earlier point. I think that's really where the value comes
I love that
from.
point, Rondo. So I think that's actually not just like a firm problem. That's like a national policy problem, right? So if
Yes.
you look at, for example, healthcare is a great example. Um, Here in Australia, right? So our non-market healthcare workforce is growing and growing and growing and growing, and that's significantly depleting our national productivity, right? Part of
Mm,
it's aging population. There's a number of reasons. It's inefficient, blah, 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 right? So there's a whole bunch of things going on there. But you know, for governments to sort of look across the economy and say, where can we have the greatest productivity impact, right? So there's two questions they got to ask. One is how do I invest in more productive industries? And then the second question is how do I reduce the productivity drain of unproductive industries? essential but unproductive. Education,
Mm.
healthcare, government workforce, those kinds of things, which are, kind of first off the rank. And then secondly, less productive industry sectors, right? So here, for example, surprisingly, we only have one, two, maybe three industries that can compete globally at scale: mining, agriculture, maybe education, right? So mining is actually declining in productivity, but it's our biggest sector, right? So putting
Hmm. Hmm.
investment into how do I create new productivity outcomes in mining should be a major national focus here. And then obviously AI could play a big role on that. Similarly, like I said already, healthcare is a major drain, education a little bit less so, but we should put major effort into improving the productivity of that. So the AI investment should go there too. I think there's very interesting policy questions here.
Yeah. I think I saw a podcast by the Harvard Chan School the other day, and they had a couple of folks on there. One was from a hospital system in Boston, and he said that they have an AI innovation center within the health system, and they're using AI both from the clinical side and in the sort of back office administrative side as well, finding use cases for it and using it.
Hmm. All right. So, Rondo, let's sort of kind of bring this to a close. What should the board, the CEO, the CFO be thinking about tokenomics?
I think they need to think about, do we have enough guardrails around AI use and spend in our organization? Are we taking a strategic approach to the use of AI tokens, or are we allowing for AI leakage because people don't have any real direction on where's the best value that they can get from AI token usage? So which models are we using in our organization? Who gets access to those models based on the type of value that they're going to create by using them? And also, where should we be investing for the long term? I think ultimately, your earlier point around value creation, that we really want to spend our tokens on. Those should be the areas that they're defining to me.
Right. Yeah. So I agree with all that. It's sort of coming back to you got to keep up on the denominator, but the real opportunity is in the numerator. So I think that's
Yeah.
certainly one. I think your point about AI governance is really important. You need to have an AI P&L. You need to understand those economics, and you need to educate your people about that. So that's really quite important. Then, of course, you need to funnel your investment into the types of opportunities that are going to create the highest return. I don't think we've
Yeah.
really learned how to do that yet. So that's, I think, important. And then I think you got to look over the horizon a little bit and start to understand that, if you're not already having the conversation about how do we hedge our AI risk, right? And, from to the earlier point, like token futures and things like that, you need to be having those kinds of conversations. But fundamentally, it comes back to this, I think the most important thing is the AI native question, which I can just translate that into a simple language is um, the insurgent, how would the insurgent approach competition or the innovation and competition using, you know, AI economics as a lever to drive that? I think that's the most important and most interesting question.
Absolutely. Awesome.
Great. Thanks, Rondo. That was a bit of fun. I mean, this is an area that's evolving, so it's probably we can duck back into this at some point in the future, but it's a fascinating sort of area, particularly if you look over the horizon and start extrapolating, you can end up in some pretty weird places. Like I said, AI currency, why not? Token currency. Uh,
Token currency.
yeah, yeah, could happen. It probably will happen. So we said it. All right. Anyway, great to see you,
Awesome.
Rondo, and
Likewise, Matt.
we'll talk soon. All the best.
All the best. Stay insurgent.
Yes, indeed. All right. Don't forget to find us on Apple, YouTube, and Spotify. We'll see you all soon. Thanks.